Good day, Junior Techies. I'm Mrs. Brumacombe, and we are going to look at Fixed Assets Activity 4. A reminder, always make sure study your theory. Refer to the theory booklet, because looking at all these activities that we are doing, you need to be able to apply the basics. If I look at this activity, the information provided was extracted from the financial records of Briggs & Partners for the year ended 28 February 2021. A reminder, always know when does my accounting period end and when does it start. If it ends 28 February 2021, it means it starts the 1st of March 2020. Take note in this activity how the information is presented. In the first question, we are required to complete the fixed asset register for one of the vehicles. Please remember, a fixed asset register is an individual record of all of my assets. If we look at the general ledger and we look at the fixed asset or the tangible asset note, it is a summary of all of my assets. It's important to understand the difference. So looking now at the fixed asset register, they provided me with the cost, 180,000, the date purchased on the 1st of January 2018, the date sold the 1st of August 2020. Depreciation is calculated 20% per annum on diminishing balance method. So now, when we complete this fixed asset register, depreciation is calculated on this vehicle for the first time from the date we've purchased it, 1 January 2018, until the end of the accounting period, 28 February 2018. This means we need to calculate it for 2 months. So it doesn't matter if it's diminishing balance method, because we're calculating it for the first time. We need to use the cost, 180,000 times 20%, very important, times 2/12. This is the common mistake we make when we complete the fixed asset register. My accumulated depreciation will be exactly the same. Again, why? Because it's the first time we're calculating it. To get the carrying value or the book value, you take the cost minus the accumulate. For my second financial year, we need to calculate the depreciation using the book value. The book value is 174,000, so we need to times that by 20%. To get the accumulate, we take the 6,000 plus 34,800, and then for the next financial year, we're going to do exactly the same. We are going to take the book value times 20% for 12 months. So my depreciation is 27,840, and to get the accumulate, we take the previous year, 40,800, and we add the 27,840. Now, for my current financial year, we now need to calculate the depreciation on this vehicle until the day that we've sold it. We didn't have it for 12 months. We have to calculate it from the beginning of the accounting period until the day that we've sold it. That equals 5 months. So my depreciation is, again, we must use the book value times 20% times 5/12. So my depreciation for this financial year is 9,280. My accumulate, we take the year before, the 68,640, plus the depreciation. To get the book value, I've got 2 options. You can either take the cost, 180,000, minus the total accumulated depreciation, 77,920, or you can take the book value from the previous year, 111,360, minus the depreciation 9,280. It will provide you with exactly the same information. Please take note. These answers calculated in the fixed asset register will be used in completing the tangible asset note. So make sure that you complete this, and when completing the tangible asset note, that you use the figures calculated in this question. Completing the tangible asset note, we're first going to focus on vehicles. So they provided me with the following information. Vehicles are depreciated 20% per annum on the diminishing balance method. Vehicle DFL02 GP was traded in at Volkswagen for the new vehicle KDH66 GP. A profit of 3,600 was made. Then they told you the total depreciation for vehicle KDH66 GP on 28 February 2021 is 31,500, which means they've actually calculated the depreciation on the new. It's also important to take note of this. I do not know what is the cost of the addition of the new vehicle purchased. So this means that we will need to calculate it. So where do I start? First, we can find out the balances in the beginning. To find out the balances in the beginning, we are going to exclude KDH66GP because I know that is my new vehicle. It means the rest is the remaining, that which we had since the beginning of the accounting period. So to calculate the cost, we're going to add the 180 plus the 300,000. The total accumulate, we're going to add 68,640 plus the 30,000. Cost minus accumulate equals the book value. Now we're going to move on to movement, and we're first going to look at what was the cost of the addition. I know that the depreciation was 31,500. Depreciation was calculated for 7 months. So I can actually solve this by completing X, using X, the unknown. I want to calculate the cost. I know the depreciation rate is 20%, so we say times 20 over 100. I know that it has to be calculated for 7 months, so 7 over 12. And I know that the depreciation was 31,500. So to solve X will provide us with the cost of the addition, which is equal to 270,000. Now we're going to focus on the depreciation. We've calculated on that which we've sold. This is calculated in the fixed asset register, the previous question. The depreciation on the new is given to us. So now we can calculate depreciation on the old. And we need to use the book value, which means, reminder from the previous activities, there's alternative ways. I'm going to take the simplest way. We take the carrying value in the beginning, and we're going to subtract the carrying value in the beginning of the asset which we've disposed of. That will provide us with the remaining, the old, which we had since the beginning of the accounting period until the end of the accounting period, which is equal to 12 months. So the depreciation on the old is 54,000. So my total depreciation for this accounting period is the old 54,000 plus that which we've sold 9,280 plus the depreciation given to us 31,500. And a reminder, it must be shown in brackets. Next, we're going to complete the disposal at carrying value. We're going to use it from the fixed asset register that we completed in question 4.1. Make sure that you use your answer. We always take the carrying value, the book value, to the disposal at carrying value in the tangible asset note, and it must be shown in brackets. To calculate my movement, we take the additions minus disposal minus depreciation equals movement. Reminder, my movement can either be a positive or a negative amount. Once we've calculated the total movement, we can now calculate the carrying value at the end of the year. To calculate that, we take the beginning plus the movement equals the carrying value at the end. To get the cost, we take the cost in the beginning, 480,000, plus the additions, 270,000, and now, very important, minus the cost of the asset which we've disposed of, 180,000. And that will provide us with the cost at the end of this accounting period, 570,000. Once we've calculated the cost, we've calculated the carrying value at the end of the year, we can calculate the accumulate. Again, there's an alternative way, the quickest, easiest way. I know that cost minus accumulate equals the carrying value. So if we take the cost 570,000 minus the carrying value 454,500, that will equal the accumulated depreciation 115,500. In question 4.3, they've now asked us to calculate the trade-in value for the vehicle that we've disposed of. Remember the information given. They didn't provide us with the cost. We could calculate that as we've done in the previous question. They didn't provide us, they didn't provide us with the selling price, that amount which we need to trade it in. This is what we need to calculate now. They did provide us with a profit of 3,600. So back to the basics. If we sold it for more than the book value, we made a profit. If we sell it for less than the book value, we made a loss. So based on that simple basics that we learn, I can calculate the trade-in value by simply taking the book value and adding the profit. And that will provide us with the trade-in value. Alternatively, if you're not sure how to do it just by adding or subtracting, you can open an asset disposal account. On the debit side, we have the cost. On the credit side, we have the total accumulated depreciation on the asset which we've disposed of. And then on the debit side, we also have the profit on the sale of the asset. So the balancing figure, remember also the selling price will always appear on the credit side. That equals exactly the same amount as calculated before, 105,680. Take note the different ways in which we can ask tangible assets or fixed assets. Here they've asked us now in question 4.4.1, provide workings to check the depreciation on the equipment. Note that some equipment was sold on the 1st of October 2020. So now we need to go to information B, which is the fixed asset, tangible asset note on equipment. So very important to take note, there's no additions. So if I take the cost in the beginning minus the cost at the end, it provides us with the cost of the asset which I've disposed of. So now we can calculate the depreciation. It's calculated 10% per annum, fixed installment method. So 36,000 times 10% times 7/12. If I sold it on the 1st of October, it means depreciation must be calculated from the 1st of March 2020 until the 1st of October 2020. That equals 7 months. Do not include October. That is a common mistake we make. to get the old or the remaining, we can use now the cost at the end, because that will exclude the asset which we've disposed of. And the reason why we can use that is because there were no additions. So to calculate the depreciation on the old, 124,000 times 10%. So if I add the old plus that which we've disposed of, you will see that it equals 14,500. In our next question, they ask us, there are different GAR principles that are evident. Name and discuss two of the GAR principles that are evident in note number 3. Make use of figures to explain the meaning of the GAR principles in accordance with the fixed asset. So can you see how the basics of studying what is your GAR principles is applied with the tangible asset note? Please make sure that you always study the basics on GAR principles, theory, and you should be able to apply that. So if we start with the tangible asset note, cost is always the original price. So it means that the historical cost is applied. Then you just quote the figures. You can quote the 160,000, you can quote the 124,000, and we can even quote the asset which we disposed of, the cost 36,000. If we look at the carrying value, prudence, being conservative, is applied. Then we quote the figures 104,000, and we can also use the 71,800. We need to be conservative. Then we look at the depreciation for the year. The GAR principle applied here is matching. Depreciation of 14,500 is brought into account, and it is a non-cash item. In the same year, it is written off. These are your options, and the question asks only to mention 2. So any of those 2 would have been acceptable. And just remember, you had to quote your figures. Thank you very much. I hope you've learned a lot in this activity. And a reminder, take note of the different ways in which it can be asked. I want to leave you with this quote: study hard, no matter if it seems impossible, no matter if it takes time, no matter if you have to put up all night. Just remember that feeling of success is the best thing in the entire world. Next, we're going to look at activity 5. I hope you have a wonderful day.